New reports out now that the average home price hit a record in this country. Now, a little bit north of $350,000. That's up 24% from year-ago levels when the average home was fetching around $284,000. With a read on all of this, Pierre Debbas, the former Debbas managing partner, Romer Debbas managing partner, not former, it's Romer. It's very good to have you just the same, Pierre. I apologize for that. You know, this is a startling uptick. I guess not too surprising. Supply, demand, I get that. But how long you see this continuing? Because some markets, it's going up at a faster clip than that. In Florida, for example. How long does this keep going?
Well, Neil, first of all, thank you for having me back on the show. And, you know, the question in terms of how long does this robust housing market last for is something that, you know, there's so many factors that are playing into the tremendous amount of demand that there is for housing right now. And what's creating this most recent sense of urgency where you had, you know, another historic level of pricing in housing take place last month is really the lowering of the interest rates, where now the 30-year fixed rate on, according to Freddie Mac, is around 2.8%. And the reason, you know, rates have been low for a number of years, but the reason I'm emphasizing this now is that with inflation going on in the economy, the Fed is clearly going to increase interest rates to try to offset inflation. And the inevitability of rates going up is sparking a huge sense of urgency now to take advantage of these historically low rates before we may, you know, not see them for a number of years. And while we've been living in a low interest rate environment,
do you think that's going to happen? I know you've baked it into your forecast cake, so to speak, that rates are going to go up. The prevailing wisdom is that's a late 2022 development, maybe 2023, but you seem to be thinking a little sooner.
Yeah, you know, I think that right now, well, I wouldn't say immediately because rates came down last month. But if you're looking, right, you know, we're already halfway through 2021. When you're talking about interest rates increasing in 2022 and all the uncertainty going on in the world, you know, people want to take advantage to guarantee that they were able to secure one of these rates. And that's driving a lot of, you know, the demand for housing, which will continue, which will have this trend go on, you know, I think for at least the next year or two. The question is, and I think, Neil, what you're alluding to is what would be, you know, what would cause a correction to take place? And, you know, what would a correction look like? Because it's not just the fact that we have historically low interest rates. You know, the housing boom we're living through right now was really sparked in the beginning of the pandemic with everybody relocating all over the country and working from home becoming, you know, a permanent fixture for some people. But what you're looking at as well, besides just that, is the fact that the level of cash that's entering the marketplace is at historic levels as well. And that's really being driven by investors who are looking at single family homes is an incredibly stable asset, you know, where many compare it to gold. With, you know, the stock market having gone up 40–50% in the last year and a half, 2 years, and everything going on in the economy, you know, real estate's always been viewed as an extraordinarily stable asset that, you know, over the course of time appreciates. And right now you're seeing, I think, roughly 25% of all home purchases right now are cash. And that really, you know, a large component of that are investors coming into the market and renting these properties out, driving up pricing, which in reality is pricing out millennials and first-time home buyers. Because you mentioned when we started just now, pricing's up, what, 24% in the last year for single-family homes? I mean, I don't remember at any point in my career seeing a 1 year uptick of that sum.
Is that overdone? I know we're running tight on time, and I apologize, but I'd be curious what you would tell a prospective home buyer at these lofty levels that he or she is going to make money on that investment when some are arguing we're already at lofty highs. How would you advise?
You know, so a couple months ago, everybody started talking about a housing bubble. And I'll tell you why I don't think we're in the midst of a bubble. Number one, this boom is not being driven by, you know, excessive credit and subprime lending like we saw, you know, 12, 13 years ago. And what you're having now is that the shortage of supply of housing is several millions of homes short of what current demand levels are. So even if supply, you know, even if additional supply comes on, there's so much demand there to absorb it. Now, the question, the biggest fear I have is that I actually don't think much supply will be coming on, because what you're seeing with inflation and the price of materials increasing, it could potentially slow down, you know, development of new single-family homes in the next couple of years. I mean, there's no secret that we have a huge issue in the labor markets with not being able to find jobs, and, you know, especially in the construction area. or find people to fill those jobs. So when you talk about, the inventory not being added to the marketplace, that's actually going to limit the risk of a significant correction taking place in the housing market.
That's very interesting. It's an interesting way to look at it. Pierre Debbas, the Romer Debbas managing partner on all of this. Always learn something, Pierre. Thank you very, very much.
Thanks, Neil.
Well, if he's right, what's happening on the housing front, that is inflation. You can call anything you want, justified or not, but a 24% uptick, that's high. But it's happening and playing out in a lot of other areas. When we come back, our market pros on how you play that and whether they're worried about that after this.